In this video, we will dive into technical analysis on the pocket option platform, and I will show you how to trade without indicators, using only the chart and the platform's basic tools. If you are a beginner, the market may seem confusing and chaotic, almost like a casino, but in reality, the market is based on logic and recurring patterns. If you learn to see price movement, levels and trends, you can understand where the market is likely to go and where to open trades. Today, we will analyze several trades in quick trading mode to immediately show how this works in practice. Most importantly, everything will be done without complex indicators, only pure chart analysis. Candlesticks, lines, support level and resistance levels. I will show you how to identify support and resistance levels, how to see trends and impulses, how to use this knowledge to enter trades across different time frames, and how to manage your risk. What are support and resistance levels? This is what I want to start with first. A support level is a price at which an asset most often stops during a decline. When the price approaches a support level, buyers begin to enter the market actively, and the price bounces upward. Simply put, it is the floor that prevents the price from falling further. Look here, on a 1-minute view. You can say that the support level is approximately here. Yes, we place a horizontal line slightly below, but we can clearly see where the price reversed. In principle, when the price falls to these levels, you can open a bullish trade. It can already be opened because we placed a line slightly lower, but today I plan to work with a different currency pair. This is just an example. Again, what is a resistance level? It is the opposite, a price at which the asset usually stops during growth. When the price approaches a resistance level, sellers start selling. You can say that resistance level on this chart was, for example, right here. The price reached this high and then declined. Again, a small correction, but on 1-minute frame we mark the resistance level here. On the chart, you mark these levels with horizontal lines across different time frames, depending on the expiration time you plan to set. This helps you see where the market may reverse and continue its movement. This is a very important point. You do not rush, you draw these lines, see the overall picture in front of you, and then you can make a well-reasoned decision. A bit about the interface. Here we select the currency pair. Here we select the time frames. You can also choose the chart type, but we use candlesticks because they are the most informative. Here are the drawing tools, the horizontal line we use to mark support levels, the trend line and others. You can experiment with these tools as well. In other words, you work with a clean chart. Now I think we can move to the opening our first order. Let's choose our currency pair. I suggest selecting the Swiss franc and Japanese yen. For now, I'm taking a look to the chart. First, we look at the hourly time frame to understand the broader trend. As you can see, after a decline there is an upward tendency. Several consecutive candles, a kind of breakout, a long candle. There was a move down here, but overall there is still an upward trend. Let's look the impulse by selecting, for example, 15 seconds. Again, you can see an upward tendency. These are candles that formed. Now there are two consecutive downward candles, but if we look at the 1 minute time frame, you can see the upward trend again. Let's mark our resistance level. We select a horizontal line. When the price reached this level, it began to fall sharply, as you can see. Let's also mark the lowest level. We see that the price reached here and even slightly lower. Again, I think I will open a buy trade here. The expiration is set to 1 minute, the amount is set to 100. You should set to 3% of your deposit. I open the trade and wait to see how the chart behaves. No sharp movements. We wait 1 minute. The candle is fluctuating slightly here. I think the price will go up. There it goes. It depends on how long it will continue. Again, the trend is being confirmed. You see two fairly large candles here, then some minor false pullbacks where the price dipped slightly, but the upward trend remains. A third candle appeared, so I think we will close in profit. We have 24 seconds left. Again, we did not rush. We didn't just press the button randomly. We drew the lines, looked at the overall trend on the hourly time frame, examined the impulse on smaller time frames, and opened the trade. And we closed in profit, yeah! As you can see, we closed in profit. We approached the process calmly, analyzed it, and ended up with a successful order. Let's choose a second currency pair and try to open another order. Let it be the euro and the Swiss franc. Today we already worked with the franc, so let's pair it with the euro. We have the 1 minute time frame set. First we look at the hourly time frame, which shows us a broader trend. You see a breakout from above. This happens. The market was slowly moving down and then there was such breakout. Let's mark the levels. This area here interests me. Judging by everything, the market will move upward, I think up to these levels. Now we open the 1 minute time frame. I open a buy trade and wait for the situation to develop. What does this indicate? These large candles with long wick, there is a general upward trend. Sometimes small prices decline appear, but this does not yet look like a full correction. The upward trend is obvious here. You can see a small correction earlier, and now the price is risen again. I think we made the right decision. Again, you can see that the trend is upward. I will not close the trade manually. I wait. I calmly set the amount and wait. Again, you risk 2-3% of your deposit. You do not rush. There is no need to hurry. The only thing you can do quickly is lose your deposit, and we do not need that. As you can see, we closed in profit. What else would I like to say? My goal in this video was to show you that it is possible to analyze the market without indicators. To trade successfully, it is enough to know how to analyze charts, work with them, work with candlesticks, and work with levels. This helps us determine the right moment to enter a trade. The overall trend cannot be determined on just one time frame. For example, you cannot look at the hourly time frame, see an uptrend, and open a 1 minute buy trend immediately. It does not work that way. You must conduct preliminary analysis, because again, it is better to make 2-3 well thought out moves than 20 chaotic ones. You can only lose your deposit quickly, but if you spend time on analysis, you will begin to understand the chart, and then you will be able to earn consistently. Today we opened 2 trades in front of you and to show how to apply this knowledge in practice. In the following videos we will cover indicators, liquidity zone and candlestick pattern. We will go deeper into the nuance of trading. For now, I wanted to show you that technical analysis mainly requires time and an understanding of what you are doing. I'm glad you were there with me in this video. I will be glad to see you in future videos. Remember, I am here to help you trade profitably, not just once, but so that you can earn consistently. My goal in this video was to show you one simple thing. Market analysis does not require complex indicators or chaotic actions. It is enough to understand the chart, see the levels and the trend, and work calmly step by step. We opened 2 trades in real time specifically so that you could see that results come not from luck, but from a system and discipline. If you want to continue learning trading, see my trades in real time, understand the logic behind entries, and learn through practice. I share all of this every day in my Telegram channel. There, I show my trading, talk about a trader's lifestyle, and publish personal signals that you can simply follow. The link to the Telegram channel is in the description below the video. Subscribe and let's continue learning together.